Hi, my name is Kumar Shah. I'm a managing director at Transit Capital. We're a growth stage cross-border venture capital firm. I think the M&A question really goes to build versus buy, right? And why you should do an M&A. What are you really getting in return for actually doing an M&A? And a lot of the cases is because you can't build something and you're buying it, right? So you're either getting speed, you're getting faster time to market, you're getting a team, or you're getting access to a customer base, a skill set that you might not have. So there's various reasons why you would want to buy versus build, and the rationale for an M&A. In terms of whether M&A varies by the type of acquirer, I think that really depends on the stage of the company, right? So because again, if you're an early stage company that's looking to do M&A, you're probably not doing large ticket M&A. You're probably doing acqui-hires to get teams, or you're doing acqui-hires to, or you're doing acquisitions to build onto your existing product, or you're doing acquisitions to build onto a new segment of a customer that you might not have access to, right? And obviously, the larger you get as an acquirer, you might be doing it just for innovation. You're now trying to get into the lending space, and you need to buy a company in the lending space. You want to say access a healthcare technology that you might not be able to build in house, right? And so those are usually the kind of acquisitions. And again, in the pharma space, you're seeing it all the time where people don't want to build new drugs. They're buying into new drugs that are already close to receiving approvals, right? So there are various reasons. Question we asked when we were setting up Transit was, why does the world need another VC fund, right? And where we saw the biggest gap in the market is to build the GGV of India. So I don't know if you know what GGV is, right? So they look across the two world's largest markets, which is US and China, and figure out what are the best investment opportunities that are out there. We think there is today not that many VC firms that are looking at US, Europe, and India, right, which is the world's largest open internet markets. And we think we can be that investor, that VC firm that looks at Indian companies that can go global, but also looking at global companies that are coming into India. So private equity, again, in general term is, venture capital also is a subset of private equity, right? If the question is, how does the level of activity in the general PE space grow in India going forward? Some of it is truly just, the ability and the backing to create an ecosystem that generates more entrepreneurs, right? I don't know what the number was in 2008, but today I think we're maybe top three or markets in the world, right, for entrepreneurship. But it's still maybe one third of what the number of startups that are being formed every year as compared to the US, right? So a lot of it is saying, how do you create that entire ecosystem, right? How do you enable more people to start off their businesses? How do you provide more capital for those entrepreneurs to grow? And then how does the overall market grow and accept the products that these startups are creating, right? Because some of it is, where if you look at the US market in particular, you look at the number of corporations that are willing to buy products from startups, right? Why the enterprise market in the US is so big is large enterprises are willing to test and pilot uh, startup products, right? And so actually having that domestic ecosystem also built out, where you're seeing an Airtel or a Vodafone, Geo working with the startup system, actually using their products, commercializing them, and then eventually acquiring some of those companies is what's really required to, and more of that activity to actually grow that startup ecosystem, right? There are certain LPs who've never looked at India and who are now looking at India, and there's certain LPs who've looked at India, and their term of India is, I'll never do it again, right? There are some LPs who made money, and you're seeing that now, right? And a lot of LPs, the guys who've seen and made some money in India is in the private equity space, as some of the companies that they've backed have got listed. And so some of that liquidity has helped. I think you're now starting to see that liquidity in the venture capital space. You're seeing larger investors coming, buying out earlier investors. You're seeing some M&A that happens. Obviously, the Flipkart Walmart deal, the Oyo, Ritesh buying out Lightspeed and Sequoia, or buying a majority of the stake. I mean, that's going to create a ton of liquidity for Sequoias and Lightspeed's LPs, gives confidence for them to double down and look at India again. I think the biggest complaint over the years has always been that India is a black hole for the private equity space. You see a ton of money going in and never seeing the light of day. That is changing.